What is going on, everybody? It's the Naughty Investor here, coming at you with another video. So, you want to be a good cryptocurrency trader and investor, and I've been in this market for about 3 to 4 years now. Since about high school, I started investing and trading cryptocurrencies, and I've learned a lot in that time span, so much so that I even wrote an ebook, which is in the description, for about $5. I don't care if you buy it or you don't buy it, $5 ain't gonna break me, people. But I did write an ebook that I feel like has a lot of great tips and tricks. Now in this video, I want to talk about how you can be a better cryptocurrency investor and trader, and just generally how you can improve your investing skills. And the first thing, this is going to be a 10-part video series. It can be a long video series. This is the first video in the series, so make sure you subscribe to the channel so you're updated of future videos in the future when I do those videos, okay? So here's the thing. Before you even start investing in cryptocurrency, or if you already have, before you start putting more money in, you have to realize there's two things in cryptocurrency investing, and this goes even beyond crypto. This goes in the stock market and things like that too, but we're just talking about crypto. You have to understand the two different investing strategies, all right? So there's two of them. There is fundamental investing and using fundamental analysis, and then there is technical investing and technical analysis. Now, in my opinion, from the years I've been doing this, I think you need both. I think you need to have a firm understanding of each of the types of investing to be a successful cryptocurrency investor, because this is a volatile market and there are scams out there. Who remembers Devora Coin and all those Ponzi schemes that people were promoting on YouTube? There is a lot of red flags, but there's also a ton of opportunity, and I've made it my mission to get out there and try and expose the scams, expose the bads, and kind of promote the good and promote the good projects. All right, so that's what my mission on this channel has always been, and also just teaching people. So what are the two different investings? Well, I just mentioned them, but what's the difference between them? And this is going to be again, a very beginner friendly video, so make sure you subscribe so you get the more advanced ones down the road. So the difference between the two is technical investing and technical analysis is mainly for trading. It's using charting software and technical indicators that I've covered in the past on my channel, such as the MACD indicator, RSI, drawing trend lines. That's what you see when people have up a charting software. I do that a lot on my channel, and they're drawing trend lines and they're drawing shapes and things, and there's different patterns. That is what's called technical analysis, and it's very important to be able to at least understand the basics of it, because it is a very powerful tool. Now, technical analysis is a great tool, but there are limitations. For one, how can you do technical analysis on a cryptocurrency coin that hasn't been released yet? What if you're investing in an ICO? Well, you can't do technical analysis. You're crap out of luck. There is no technical analysis that you could do on an ICO because it's not released yet. You could only do technical analysis on coins that have been out. And also remember, if a coin's only been out a short period of time, that weakens the availability of technical analysis, because you're looking at previous price trends, and if there's not a lot of them, you're really kind of, you're not doing much. There's not much you could do. And that's when the next investing tip comes in, and that is fundamental investing. Fundamental investing is very different than technical analysis. Fundamental investing is trying to find the intrinsic value of this asset, of this coin, when we're talking about cryptocurrency. So when you're doing fundamental investing, what I always do is what's called SWOT analysis. And that's when you identify the risks, the competition, the opportunity, all those different things when you're looking at a coin. So if you're looking at a cryptocurrency and it's trying to disrupt a market, right? Let's say it's cloud storage. You're going to look at how valuable cloud storage is. Is it a huge industry, a small industry? Is there a lot of competition? And you're going to go into that and look at that like, hey, there's 5 key cloud storage businesses out there, and each of them has very slim profit margins, which means if I come into this industry, there's a lot I could do. Or if this coin rather comes into this industry and offers a service, you know, a DApp, a decentralized application, you know, maybe based on Ethereum most likely, or possibly in the future Neo, depending on which one of those coins really takes off. I'm invested in both, and you should be too, because you could be diversified. But not to get on that tangent, what the thing is you have to identify the business strategy when you're looking at fundamental investing. You're looking at the market cap. How much money is this worth, right? Is it overvalued? Is it undervalued? Let me give you an example. If there's a coin that is going to be able to disrupt let's say $1 billion industry, right? So this coin, and I'm just speaking theoretical here, it's going to disrupt a $1 billion industry, and you're looking to invest in this coin. But you look at the market cap, and the market cap is $5 billion. So this coin is $5 billion, you know, as far as all of them added together, the entire value, but it's only able to disrupt a $1 billion industry. You would not want to invest in that coin because it's overvalued. That's fundamental investing, because you're looking at where the opportunities lie, where the chips have fallen, and where you're left with, okay? So that's an example of a coin that you wouldn't want to invest in. However, if there's a coin that could disrupt let's say $1 trillion industry, and the coin is only worth $10 million, right? And then you look at the team. You look at the team, you rule out any red flags, you make sure that they're a good team, and then you look at the token supply. How many of them are there? Because that's when you get into psychological barriers, right? So psychological barriers are sort of like the moving averages of fundamental investing, if that makes sense. I've done a video on moving averages in the past. I know I'm not trying to overwhelm you guys, but there's just so much to cover. I did a video on moving averages in the past. Now, moving averages in technical terms and technical analysis is basically it'll have a line of all the closing dates, and there's the 200-day moving average, you know, the 100-day, 50-day. There's tons of different moving averages and tons of different types, and those help identify support and resistance. In fundamental analysis, there's psychological barriers, and those help identify support and resistance, and those are a little bit harder to get because you can't just put it into your algorithm, into your charting software. You actually have to look at the community and look at what it's done previously, and just look at the general sentiment in the market, okay? So fundamental investing is very important, and so is technical investing and technical analysis, because they both provide a ton of information for you, the investor. Okay, so I'm trying not to be super long-winded with this video. It is just an introductory video to make sure that you guys know this is going to be a separate series on the channel. Probably about once a week I'll be doing a video for this series. I'm going to try to stick to it, and I'm basically going to go down how to become an amazing cryptocurrency investor, how I've made a lot of money investing in trading cryptocurrencies, and it's going to go over the key differences between the different types of cryptocurrency investing. That is technical analysis and fundamental analysis. All right, so this is the beginning video. Make sure you subscribe, leave a like, share the video. If you want to grab the ebook, it's down below. If you don't, I don't care. $5 ain't gonna kill me. And I hope you have a great day and enjoy the video, and share it everywhere, and keep on hodling. Peace out.
So firstly, you're going to want to put in the indicators. For that, depending on what software you're using, usually you're just going to right click, and it's going to bring you up to the indicators and strategy, and you're going to click MACD. Brings you up right there, and then here you are. Now, what the MACD will do is, in layman's terms, you want to trade the crossings, okay? So when this blue line crosses above the orange line, you're going to see price increasing, generally. When the reverse happens, and the orange line crosses below the blue line, you're going to see price declining, okay? So it's kind of very simple, and we can actually look back on Ethereum. We're using Ethereum for the example, and it proves this, okay? So right here, you can see there's a crossing. The blue line crosses under the orange line. And look what happens to the price. It declines dramatically. Then, right about here, the blue line crosses above the orange line, okay? And then the price goes up, and you see buying volume. Again, there's another reversal. The blue line crosses under the orange line. Prices go down, okay? So it's very simple to use. Now, how do you anticipate, okay? That's really the point of this video. How do you anticipate what's going to happen? It's actually pretty simple. You can use added indicators. You could add in the RSI if you wanted as well. And I've done videos on RSI in the past, but let's just pretend you're you're not using any RSI or anything, how could you anticipate trades? Well, look at how they're trading. Look on the lines and look at the distance between them. Okay, so as you can see on this, you're starting to see a little bit of a closure. Not a huge closure. You might not want to pull the trigger yet on Ethereum on this trade, but you start to see they're kind of coming together. Now let's look about right here. You can see you would have seen them start to really come together to where you could see, hey, they're going to cross soon. You could have bought there, ran this up, and then once you see that the lines are starting to cross in the reversal, you could have sold and got out here. So you could have bought at this is the Ethereum to USD chart. So you could have bought at 495 roughly, and you could have sold at about 555 if you had done that trade. All right, you would have seen the lines coming together. You would have bought. Let me just circle this. You would have bought. And then you would have seen the lines starting to close, and you would have sold. Very simple, very effective. I don't do this strategy to this day, but I